Hello friends and welcome to this wonderful video on types of accounting and golden rules of accounting. Friends, before this I've already made a video on the same topic but in Hindi, and I have got multiple comments requesting me to make videos in English, and that's the reason here I am with my video in English, and we begin with understanding the types of accounts and the golden rules of accounts. Friends, in this video we are not just going to understand the types or the rules. We are in fact going to understand the application of it. We are going to look at least one example of each of the types and how to apply the rules when you are actually doing your journal entries. So this video becomes very essential if you are trying to learn what goes where, what type of journal entry should be done for which type of account. So stay till the end of this video and understand the complete process of how to identify the accounts and how to apply the rules to place the transactions in their respective accounts. Let's begin. Here we go with personal accounts, friends. The first type of account that we are dealing with is the personal account, right? There are three types of accounts: personal, real, and nominal. So to begin with personal account, friends, what is a personal account? As the name itself suggests, personal account is an account that relates to individuals or firms or companies, maybe a cooperative society, a bank, financial institution. In fact, in simple terms, if I want to explain you, friends, it is the account of any individual or an entity. So it is a real person or an artificial person. Yes, a real person can be human being like you and me. Whereas an artificial person is a company, is a bank, is a financial institution, a cooperative society. All these are called as artificial persons, which are registered under the Companies Act. So all of them, they form personal account. Now, what is the rule for personal account? The rule is debit the receiver, credit the giver. Friends, understand. Debit the receiver and credit the giver. Okay, let us understand this with an example. Debit the receiver, credit the giver. What does it mean? That in personal account, let's take an example. Paid XYZ Private Limited 10,000 rupees by check. Understand the question well. You have paid XY, you as in your company, has paid 10,000 rupees by check to XYZ Private Limited. Now, friends, let us understand what are the two parties that are involved, because we know that in accounting there are two transactions. Every transaction is recorded in two different entries. Let us understand what are those. So in this transaction, we understand who is being paid, XYZ Limited. And from where have you paid? You have paid it through check. Now, because you have paid it through check, so will involve the bank account. Yes, very right. So you have paid to XYZ Limited. So XYZ's name would come, and you have paid by check. Now, check, you have issued a check and the payment is done by bank. So we have two personal accounts involved over here: XYZ Private Limited and the bank. Now tell me, as the rule is debit the receiver and credit the giver, we need to classify who is receiver and who is the giver. So XYZ Limited is what? XYZ Limited, of course, is a personal account, bank is a personal account. XYZ Limited is the receiver of the money. You have paid it to XYZ, so XYZ is receiver of the money and bank is the giver of the money. Yes, friends, once you have identified who is the receiver and who is the giver, it becomes very easy. So it simply means that debit the receiver means you will have to debit the receiver's, that is XYZ's account, and you will have to credit bank's account. Yes, XYZ account debited, bank account credited. This was your personal account. Let's move further. Okay, now when we come to understand the real account, what is a real account, friends? The name itself suggests you it is an account of something real, maybe assets or properties. Yes, of course, remember it includes the tangible as well as intangible assets. Now, what do we mean by tangible and intangible assets? Friends, tangible assets like your is your land and building, plant and machinery, fixtures and furnitures. All these are your tangible assets. What are intangible assets? Maybe your patent, copyright, trademark, goodwill, brand value. All these are your intangible assets. But remember, both of them are assets, and that is why the accounts of both tangible as well as intangible assets form real account. Now, what is the rule for real accounts? The simple rule for real accounts is debit what comes in and credit what goes out. Yes, friends. Debit what comes in and credit what goes out. Very easy. And this is the simplest rule that you could ever have. Let us understand its application. Okay, there's an example, purchased machinery in cash for 8,000. Friends, understand, very easy transaction but very important. You have purchased machinery in cash for 8,000. So now you tell me which two accounts would be involved in this case? Perfect. One would be machinery account and the other is cash account. Right. When we paid through bank by using check, we involved bank account. Now, because the payment is in cash, we directly are dealing in cash. So it is the cash account that we would be having in over here. So we have machinery account and cash account. Now, machinery is what? It's an asset, right? So real account. And what is cash? It is as well an asset. So even machinery account is a real account and cash account as well is a real account. All right. Now tell me, machine is coming in or going out? Okay, because you have purchased machinery, so you should look at that machinery comes in. And what is going out? Definitely, cash is going out. So machinery comes in, cash goes out. Now apply the rule. What's the rule, friends? Debit what comes in, credit what goes out. So what is coming in? Machinery comes in, so machinery account debited, and what is going out? Cash is going out, so cash account credited. Perfect. Machinery account debited, cash account credited. Yes, so easy, isn't it? Yes, all right, stay tuned. Now we are going to look at the third and most important account. And why am I saying this is important? Because most of the students they get confused while you are making entries related to the third account. And the third account is the nominal account, of course. Let's see an example, one more example of real account, and then we'll go to the nominal account. Okay, now this is the opposite entry. Okay, that time it was machinery purchased. Now we are going to talk of furniture sold for cash. The example is sold furniture for cash. Now you tell me which two accounts are involved. Come on, tell me, friends. Perfect. One account is cash account and the other account is furniture account. Now you would notice I've written cash first and furniture later on. Why? You would understand it in a while. But tell me the types of accounts. Definitely, cash account is a real account. Furniture is an asset as well. So that is to a real account. So we have two real accounts involved. Cash account and furniture account. Both are real accounts. Now tell me, as per the rule, something should come in, something should go out. What is coming in and what is going out? Cash of course is coming in because you sold something, so you got in cash. So cash comes in and furniture goes out. Perfect. Cash comes in and furniture goes out. Now the same rule applies here. Debit what comes in, credit what goes out. And thus cash account would be debited and furniture account would be credited. Perfect, friends. So cash account, real account comes in, so debited. Furniture account is also real account and it goes out, so it would be credited. I hope you are understanding how should be the thought process. That is my intention. I'm not here only to make you understand the rules because there are a lot of books that would explain you this. But through this video, I want you to understand the thought process, how you should approach to a transaction for deciding which account it should go and what entry should it be, whether it should be a debit entry or a credit entry. Okay, now let's move to the third type of account, and the third type of account is the nominal account, right? Nominal, friends, when we say nominal, please understand these are the accounts that are related to incomes, expenses, losses, and gains. Yes, please understand we are talking of either income or expense. So these are opposite terms, income or expense, or whether it is a loss or a gain. So it can either be an income or expense, or it can be a loss or a gain. So all four things, all four types of transactions would be considered as nominal accounts. Examples, I can tell you wages account, rent account, interest account. Like wages and rent, they are expenses. Interest received, so that's an income. Salary is again an expense. Bad debt is a loss. And purchase account, which is again an expense. So we have income, expense, loss, and gain. These four types of accounts are termed as nominal account. Now, what's the rule for nominal account, friends? The rule is simple: debit all expenses and losses. Debit all expenses and losses and credit all incomes and gains. Yes, friends. Debit all expenses and losses, credit all incomes and gains. That's the rule. Perfect. So let's see a few examples related to the nominal account to understand it better. Perfect. Salary paid to staff 20,000 rupees. Now friends, you tell me, you have paid salary to staff 20,000. So which two accounts should be involved over here? Okay. Acha friends, just a word of caution. Let me tell you that whenever you are dealing with nominal account, most of the times, most of the times, the nominal account will not have a nominal account opposite to it. Yes, you can remember this. Most of the times, nominal account will not have an opposite entry in the nominal account itself. It could be a real account, it could be a personal account, but rarely it would be a nominal account. Like in this example, you could see salary paid to staff. So what is being paid? Salary. So one account involved is salary account. And because it is paid, remember friends, whenever some amount is paid, whenever some expense is paid, you do not try and write whom it was paid to, but rather you simply involve the cash account because it is paid. So it's over. Cash has gone out. That is what is the assumption. Okay. So when it is something that is already paid, we take only the cash account in consideration. Okay. So right here we have salary account and cash account. Now tell me, what type of account is salary account? As just we saw, salary is an expense and all incomes and expenses, losses and gain, they form a nominal account. Now, what type of account is cash account? As we already discussed, cash is an asset. So cash account is a real account. Perfect, friends. Salary account, nominal account, cash is a real account. Now be careful. You will have to apply the rule of nominal account to salary account and the rule of real account to cash account. What's the rule of salary account? Debit all expenses and losses and credit all incomes and gains. What is salary? Salary is an expense. So salary is an expense. So it would be debited later. Now what about cash? Is cash coming in or going out? Cash is going out. Cash is going out. Okay. So what's the rule for nominal account? Debit all expenses and losses. Thus salary account is debited and cash debit what comes in, credit what goes out. So since cash goes out, cash account is credited. Perfect, friends. I hope you understand. If you're unable to understand, friends, please pause, have a look at it. You may rewind and re-understand the same. Listen again to the same video and understand it. We'll take one more example because nominal account is something which needs more attention if you're doing it for the first time. Once you get used to it, it becomes very easy. It's like a cakewalk unless and until you are through with it. Okay, let's see one more example. Interest received 400 rupees in bank. Now, friends, you tell me which two accounts are involved. Perfect. One account is an interest account and the other is a bank account. Perfect. Friends, wonderful. One is a bank account, the other is an interest account. Why bank account? Because you have received interest in bank, right? It is not in cash. If it would have been only received amount, then you would have not taken bank account, you would have written cash account. Now here the receiver is bank. And what is received? Interest is received. Again, two types of accounts. Friends, bank account is, as we have already seen, bank account is a personal account. Bank account is a personal account. And what type of account is an interest account? Interest, we know interest is not an expense, rather interest is an income because your interest was received. And interest, expenses, losses, incomes and gains, they all form nominal accounts, right? So bank is a personal account, interest account is a nominal account. Now tell me the rule of bank, that is the personal account. Rule says debit the receiver, credit the giver. Who is bank in this case? Receiver or giver? Of course, receiver. You have received interest. So debit the receiver. So bank account is the receiver's account. And in case of nominal account, what do you do? Interest is what? Income or expense? Interest is an income. So debit all expenses and losses, credit all incomes and gains. Since interest is an income, so it would be income and gain. Okay, now based on this, debit the receiver, debit The receiver is the personal accounts rule, so will debit the bank account. And the opposite entry for nominal account transaction is rule is debit all expenses and losses and credit all incomes and gains. Now it is an income or a gain, so interest account would be credited. Perfect, friends. Friends, I hope with this you have understood all three types of accounts when we are doing accounting entries, and also you have understood what is the thought process in classifying the transactions in different accounts and then applying the rules of accounting. These rules are called as well called as golden rules of accounting, because if you are thorough with these rules, no one can stop you to make perfect and accurate journal entries and the further accounting process. Friends, I hope this video was helpful. If you have liked this video, kindly hit the like button. Please subscribe to this channel and comment which more videos would you like to have from this channel. Up till then, thank you and goodbye.